Yes. So we are discussing about issue of right share, right? Issue of right share. Bonus revision gone already. So, what do you mean by right issue or right share? Basically, yes. Nice reading. Good. So, whenever the company want to raise a money from the public, right? They should first offer it to existing shareholders. That is the right of the existing shareholders, right? So that offering of the shares to the existing shareholders by the company, that is known as right issue. This will be done just to make sure the dilution of the ownership won't happen, right? And it will be done in the proportion. It will be done in the proportion, and people, whenever the company want to raise the fund or raise the money from the public, before that first they should offer to the existing shareholders, later they should offer to the employees in terms of ESOP. But to offer as a ESOP, they should pass the special resolution. Later they can issue it to any person in particular. However, before issuing to that particular person, that resolution should pass as a special resolution in the general meeting, not board meeting, general meeting. Clear? Okay. Now, when the shares are first offered to the existing shareholder, that is known as right issue, no? So for the right issue, the company should make the offer. When they make the offer, they should prepare the letter, right? Letter of offer. So what and all are the terms should be there in the letter of offer? First, it should be there how many shares they are offered, like they are getting offered. 2, price of that share. 3, within how many days they should exercise that option. Within how many days they should exercise their option, but they should make sure that should not be less than 15 days. So at least 15 days time should be given for the exercising the option, but not more than 30 days. Max to max they can give a time of 30 days to exercise the option. Done. If the question is silent or if the notice is silent regarding the renouncement of the right, then it is assumed to be renouncement right is there. What do you mean by renouncement right? The person who is having the right to purchase the share, he can transfer that right to someone who is not having that right or who wants that right, right? That is renouncement of right. Whether that person is going to give it for free, the answer is no. He is going to collect the value of right. So how to find out the value of right and all, we will see later. Done. And after the expiry of the time or before expiry of time only, if shareholders tells we don't want your share, then the director should dispose of the shares which are not disadvantageous to the existing shareholders. Correct? And if no communication is done by the shareholder before the due date, then it is assumed to be not exercised, deemed to be not exercised. Correct? And that notice could be sent through speed post or registered post or email. But however, whenever you are sending it through the any of this thing, it should be sent 3 days before the opening of an issue. Done. So this is all about the basics or all about the theory. Coming to the accounting point of view, we know that whenever the shares are issued, here keep one thing in mind. What? That is, here the shares will be issued not free of cost. In bonus it will be issued free of cost. Here it will not be issued free of cost. Of course it will be issued in proportion but not free of cost. So it is just the additional shares offered to the existing shareholders. Correct? So what happens? It includes leads to the increase in the number of shares available in the market. Because of this, market price will fall, and before right issue, the market price will be known as cumulative right market price, because Before right issue, the right value also included in the market price. So that is known as cumulation of or cumulative of value that is right in the market price, which is known as cum right price. If after the issue, that will be exclusion of right market price, which is known as X right price. So, for example, if I am a holder of a share, before right issue, I will be having around 200 rupees as a price, value of the share, market value. After right issue, if it becomes 120, I am losing 80 rupees per share, correct? I am losing 80 rupees per share. So that is value of the right I lost per share, not the value of right per share, right value per share, correct? Okay. So how to find it out? Very simple. Cum right price minus X right price. That is known as right value per share. How much is the right value? What I lost is per share. If I am holding 10 shares, right issues are for 4 shares, like 4 shares are issued, then I am losing 10 shares value. So whatever the right value per share I will get, that I should multiply it with the number of shares held, that is 10. Clear? Yes. How to find the X right price, sir? Very simple. Before right, that is cum right price CRP into existing number of shares plus issue price into new shares divided by existing share price plus new shares, I will get the X right price. If I reduce CRP like ERP from CRP, I will get a value per share. If I multiply it with number of shares held, I will get a value of right. And question to be observed very carefully, whether right issue is happening first or bonus issue is happening first, accordingly it will be solved. But one thing you have to keep in mind, if at all right issue happens first, it is issued at a premium, then the premium availability for the bonus will be more than what is given in the question. In question they will give no securities premium. Not only so much, the securities premium what we receive by issuing the shares, that also will be included. Accounting point of view, what is it, sir? For company it is one more normal issue, that's it. One more normal issue. If it is issued at par, entry will be bank account debit to share capital account. If it is issued at premium, entry will be bank account debit to share capital to securities premium. Correct? Yes. Then yeah, you should check whether the right issue includes the bonus or no while calculating number of shares to be issued, proportion and all. Their question only clarifies, you should keep it in mind. Okay.
If the question is silent on whether the bonus is included or not, we can assume it is included.
Depending upon the date. The last question which we solved. Bonus was issued on 1st May, right was issued on 1st June. They gave right issue given till the date of issue, which means till 1st June. Then it is assumed to be bonus has been included. Okay. Yes, this is all about the right issue. Not much. Theoretically, you should be very careful. Anyhow, this you are going to learn theory wise in your law also. Hope so much is clear.